Today, oil makes up less than 1% of Dubai's entire economy. Read that number again, right? Less than 1%.
Here's the problem with that picture. It's not true pace, not even close, and it hasn't been for decades. Everyone assumes Dubai got rich from oil, endless oil money, sheikhs swimming in barrels of crude. That's the picture. So if oil didn't build this city, no farmland, no factories, no rivers, nothing green for miles, what actually did? A desert on the edge of the Gulf Kerings, almost nothing to sell, and barely any oil left.
Before skyscrapers existed, Dubai survived through fishing, pearl diving, and trading across the Gulf, building its earliest economic foundation.
The real explanation isn't buried underground at all. It's something far stranger than any oil field could be.
Dubai simply figured out how to get incredibly rich, without ever having very much of anything to sell. Dubai doesn't sell a product to the world, not the way Saudi Arabia or Russia sell oil.
Every car passing through doesn't need to be built here. It just needs to stop, pay, and move on.
Instead, it sells access, access to money, to people, to companies, and to cargo passing through. Think of Dubai less like a factory that builds things, and much more like a simple toll booth on a highway.
Money passing through, people passing through, goods passing through, companies passing through, all paying a small toll.
Once you start seeing Dubai as a toll booth economy, almost everything else about this city starts making sense. Rewind all the way to the 1950s. Dubai back then was a small trading port on a creek, known mostly for pearls.
Pearling collapsed almost overnight in the 1930s, when Japan invented the cultured pearl. Dubai's entire economy nearly died with it.
In 1959, the ruler Sheikh Rashid borrowed money he didn't actually have, simply to dredge the creek even deeper.
A deeper, wider creek meant much bigger ships could finally dock here, and bigger ships meant far more trade.
In 1966, oil was finally discovered just offshore, but even then, the reserves turned out to be quite small.
Abu Dhabi, right next door, had oil reserves in the billions of barrels. Dubai only had a small fraction of that.
Oil production peaked around 1991 at roughly 400,000 barrels a day, and then it started steadily declining.
Sheikh Rashid, and later his son Mohammed, made a decision that most oil-rich rulers almost never make.
That single bet is exactly why Dubai looks nothing like a typical oil state today at all. Let's start with the most visible piece of this entire machine: real estate, right in plain sight. In just one recent year, over 180,000 property deals closed across the city of Dubai.
Total value, more than 500 billion dirhams, BIFI, which comes out to around $140 billion. Foreigners can own property outright here, with no local partner required, inside designated freehold zones citywide.
But here's the real hook, buried quietly inside the fine print of every single contract.
Buy a single property worth around $545,000, and something interesting happens. You don't just get an apartment, you get a full 10-year residency visa attached to it. Dubai isn't really selling square footage here at all. It's selling a legal right to stay. Buyers come from India, from the UK, from China, from Russia, all chasing exactly the same visa. Areas like Jumeirah Village Circle alone recorded over 4,000 transactions in just a single quarter. Every new tower here isn't just concrete. It's a visa factory quietly disguised as an apartment block. And every visa holder who moves in becomes a spender for everything here, except their actual income. Here's the part that most people, honestly, misunderstand completely about how this city runs. Dubai charges absolutely no personal income tax. Zero. Not a small rate, genuinely, completely 0%. That sounds like the government simply giving something away for free. It really isn't, though. Every dirham someone would have paid in tax elsewhere instead gets spent right here in Dubai. On rent, on restaurants, on school fees for the kids, on brand new cars every year. The government here doesn't tax your income directly at all. It taxes everything that income actually touches.
VAT on every purchase, fees on company licenses, fees on every single property transfer that happens.
Zero income tax isn't generosity from the government. It's a customer acquisition strategy for an entire city. Next, the free zones quadrants. Around 30 of them, each one built specifically for a different industry.
Media zones, tech zones, finance zones, logistics zones, even dedicated gold and diamond trading zones exist here.
Inside a free zone, a foreign company keeps 100% ownership. No local partner needed.
Zero corporate tax on qualifying income, and full profit repatriation, with absolutely no restrictions at all.
Jebel Ali Free Zone opened back in 1985, the very first of its kind here. A container can arrive from China, get relabeled and repackaged, then leave for Africa within just days.
That's called re-export trade, and it's actually a massive, very quiet part of this economy.
Dubai isn't really trying to make things. It's trying to be where the paperwork gets signed. Total non-oil trade recently crossed a full $1 trillion in just a single year alone. Dubai doesn't need to manufacture the product itself. It just needs the product to pass through. Every single container that touches this port, even briefly, quietly, generates a small fee. Multiply that by millions of containers, and this toll booth starts printing genuinely serious money. Now, the piece almost everyone actually sees whenever they visit this city. Tourism, plain and simple.
Hotel occupancy stayed above 80%, with nearly 45 million room nights booked across the city.
But the real engine behind all of this isn't hotels at all. It's the airport.
Dubai International alone handled over 95 million passengers in just a single calendar year.
Here's the real twist, though. Yundik, a huge share of those passengers never actually leave the airport itself. They're just connecting, simply changing planes here, on their way to somewhere else entirely different.
Dubai sits within an 8-hour flight of roughly 2/3 of the entire world's population. Emirates Airline itself was built almost entirely around exploiting that single geographic advantage, again and again.
So even a traveler who never actually plans to visit Dubai still pays landing fees, lounge fees. Duty-free shopping alone, inside just one single terminal, generates hundreds of millions of dollars each year.
Tourism and aviation really aren't two separate businesses here. They're one single connectivity machine, working together.
The least visible piece of all this is often, quietly, the most profitable one: financial services.
Finance and insurance together make up over 13% of the UAE's non-oil economy overall. The Dubai International Financial Center actually runs its own completely independent legal system, separate from everything else.
Modeled directly on English common law, with its own courts, and its own dedicated regulator. Why does that actually matter to a hedge fund in London, or a family office in Mumbai? Because low tax alone genuinely isn't enough. Wealthy money also wants real legal certainty too. DIFC essentially sells certainty itself as a product, neatly packaged inside gleaming glass office towers. And certainty, it turns out, is something wealthy people will happily pay a serious premium for. Behind all of this sits one single physical asset that actually makes it all possible: the port. Jebel Ali is actually the largest man-made harbor on Earth, built entirely from dredged desert sand.
It's now run by DP World, a company Dubai's own government built and still fully controls. DP World doesn't just run this one port. It operates terminals in over 70 countries worldwide. Which means Dubai doesn't just profit from its own port, it profits from ports everywhere else too.
A ship docking quietly in Rotterdam might actually be paying small fees straight back to Dubai.
The toll booth model itself didn't stay inside this one city. Dubai exported it globally instead.
That's a fundamentally different strategy than simply digging oil straight out of the desert ground. None of this actually runs on private companies alone. The government owns most of the machine.
The Investment Corporation of Dubai holds direct stakes in the airline, the utility company, and major banks. When Emirates Airline books a profit, a portion of it flows straight back to the government.
This really isn't a free market accident at all. It's a centrally planned, government-owned growth engine.
Every major deal, every free zone, every skyscraper traces directly back to state-linked capital somewhere. Dubai isn't really a city that simply got lucky. It's a corporation wearing a flag.
Now here's the part the tourism board honestly never puts on any billboard, anywhere at all.
In 2009, this entire carefully built model actually came very close to breaking completely.
Dubai World, the government's own investment conglomerate, had quietly piled up $60 billion in debt. Much of that debt was funding the exact same real estate boom we just walked through.
In November of 2009, Dubai World asked all its creditors for a simple payment delay.
Global markets panicked almost overnight. Stock exchanges from Tokyo all the way to London fell sharply. Dubai's own government initially refused to guarantee the debt outright. That decision made things considerably worse.
It ultimately took a $10 billion emergency bailout from neighboring Abu Dhabi to stop.
Abu Dhabi had the oil reserves. Dubai had the debt. The Federation somehow held it all together. The real lesson wasn't that people had simply stopped wanting Dubai real estate at all.
It's that a toll booth economy, built partly on borrowed money, can still absolutely collapse.
That whole crisis exposed the honest, structural risk hiding quietly underneath all of the shine. Developers took on debt assuming prices would just keep climbing forever. Prices don't always keep climbing. When global credit tightens, new capital slows down a lot. But loan payments never slow down. Fresh water here comes almost entirely from energy-hungry desalination plants, never from rivers or actual rain. That means even ordinary drinking water is tied directly to energy prices and infrastructure debt here.
Real estate here has swung wildly before. A boom in 2008, a crash right after.
A toll booth only really works if traffic keeps arriving faster than the bills actually do.
Dubai's 2033 economic agenda actually aims to double the entire economy's size within just one decade.
That's a genuinely aggressive bet, built on the same borrowed growth playbook that nearly broke in 2009.
There's a real reason Dubai builds the world's tallest tower, artificial islands shaped like palm trees.
None of these projects are actually efficient investments when you look at a spreadsheet. But they were never really built for return on investment at all. They're built for headlines.
Every record-breaking structure becomes free global marketing, seen by billions without spending a single ad dollar. That's exactly what convinces a family in Mumbai or an entrepreneur in London to believe.
Expo 2020 alone cost around $7 billion, largely just to broadcast that exact message. The skyline itself isn't just decoration, it's genuinely the advertisement for this whole toll booth economy.
Belief is really the one resource Dubai actually needs to keep manufacturing here, endlessly and constantly.
So let's add it all up now. Real estate and residency, sold together as one single package.
Zero income tax, deliberately designed to pull spending inward instead of quietly blocking it entirely.
Free zones quietly turning Dubai into a convenient legal address for global business, worldwide, everywhere, at once.
A port and airport, both built purely to profit from people and goods just passing through. Financial services, quietly selling legal certainty to money that simply wants one safe, stable home. And underneath every single piece, a mountain of infrastructure debt that has to keep being repaid.
It started selling something that never technically runs out at all. Belief.
Dubai never really stopped selling a resource altogether. It just quietly stopped selling oil itself. And the moment that belief gets tested, exactly the way it was back in 2009, the whole model finds out exactly how solid the ground beneath that skyline actually really is.